fake tungsten bars in the gold markets? The main mechanism that oversees and protects the world gold markets from fraud and counterfeits is called the London Bullion Market Association, or LBMA. It was established in 1987 by the Central Bank of England and is a wholesale, over-the-counter market for the trading of gold and silver. Only members of the LBMA are permitted to trade in this exclusive market, which comprises of central banks, government agencies, bullion banks, gold dealers, refiners, and the occasional big investment organization. This professional market only deals in what are known as good delivery bars. If you're not trading these bars, you are excluded, both from their market and from their very competitive prices, which means you'll pay more when you buy and receive less when you sell. In order to facilitate liquidity and protect large traders, the London Bullion Market Association came up with the Good Delivery Standards, which are the strict criteria used by what's become known as the Good Delivery Circuit. The system begins with a group of accredited refiners, all of whom have been certified by equally accredited assayers. The refiners manufacture the 400-ounce bars, applying their stamps and serial numbers before sending them out. Requirements for bars making and remaining an LBMA good delivery bar are stringent. They need to have a fineness of at least 99.5%. They must have certain inscriptions, serial numbers, refiner's logo or mark, exact fineness level, and year it was produced. They must have at least 350 ounces but cannot exceed 430 ounces. The length must be between 210 and 290 millimeters. Must have a width between 55 and 85 millimeters. And must be 25 to 45 millimeters tall. If a gold bar is unable to fulfill one or more of these requirements, it will be stamped with an NGD to show that it is not a good delivery bar. Good delivery bars are considered safe because they have never been in private possession. From the day they were first manufactured, they are kept in bullion vaults recognized and monitored by the local gold dealing community. Every time bars are moved by accredited bullion couriers, a careful record is maintained showing continuous storage throughout trusted hands. This guarantees the gold bar's integrity. The result is that a professional buyer's vault will accept deliveries of these bars direct from the seller's vault without rechecking their purity. The seller gets paid quickly and efficiently, and bullion trading costs are reduced for both the buyer and the seller. This is what good delivery bars are all about, and it's why the high volume and high integrity professional bullion markets get the best price. And it is this system that I have some reservations about. Number one, it was created by a central bank. 2, it chooses who the exclusive members are who will trade in this market system. 3, no one is permitted to see the gold other than the official custodians and sub-custodians. 4, once these bars are considered within the LBMA circuit, and classified as good delivery bars, there is no longer a need to verify the bars ever again. A single 400-ounce bar could be circulating around the market for decades without ever being re-assayed for authenticity. This is a 100% multinational trust system of LBMA's members comprising of 119 companies in 21 countries. They include the world's leading bullion banks, precious metals dealers, refiners, mints, assayers, transport and secure storage providers, as well as jeweler fabricators. This London Good Delivery List of gold was initially established in 1750 and is currently managed by the Central Bank of London. And 6. fake tungsten-filled 400-ounce bars are being discovered in the gold markets. According to an article by Rob Kirby published in September of 2009 entitled On Doing God's Work, in October of 2009, the Chinese received a shipment of gold bars. When the shipment was received, tests were conducted to verify their authenticity. Officials were shocked to learn that the bars were fake. They contained cores of tungsten with only an outer coating of real gold. It deeply concerns me to see a global market checks and balances process that is created by the central banking system, which has no auditing requirements, determines within its own organization who will be added to the list of members, and has no government or external third-party oversight. And the world trusts this market system? There are so many ways this system can become corrupt. Just a single link in the chain, and because they are all trusted, no one questions the product from that point forward, as long as it stays within the LBMA circuit. Even after claims that there could possibly be 1.5 million 400-ounce bars in the global gold markets, there is still no actions taken to protect investors. Well, I found out why. They have already set it up so that the investors will end up taking the responsibility and financial loss in the event the gold doesn't turn out to be authentic. The physically backed gold ETF GLD. GLD ETF was born in November 2004 and is the first ETF in the US to allow stock traders to directly gain price exposure to physical commodities, gold and silver. Stock investors could buy assets to track the price of gold, get immediate and easy knowledge about gold, then speculate, buy, or sell. It is the second largest in the world behind SPY, with a mammoth 1,117 metric tons of gold bullion in trust worth for shareholders. Check out the fine print listing the risk factors mentioned in the prospectus of the GLD ETF. Gold bars allocated to the trust in connection with the creation of a basket may not meet the London Good Delivery Standards, and if a basket is issued against such gold, the trust may suffer a loss. Gold Prospectus, page 11. This means the physical bars may not be up to standard of the London vault where they were actually held, and if it's discovered that the gold is in any way counterfeit or not pure, the fund and its respective shareholders, the trust, can take a loss. Because neither the trustee nor the custodian oversees or monitors the activities of the sub-custodians, who may temporarily hold the trust gold bars until transported to the custodian's London vault, failure by any sub-custodians to exercise due care in the safekeeping of the trust's gold bars could result in a loss to the trust. GLD Prospectus, page 11. What this is saying is a custodian is a financial institution that has the legal responsibility for a customer's securities. This implies management as well as safekeeping. In short, the custodian is in charge of managing the gold bars to ensure that the vault holds the proper amount of the commodity. The issuer of the fund and the company who manages the gold does not always directly oversee the person who physically puts the gold in the vault, or sub-custodian. Should the sub-custodian lose a bar, steal, or damage any of the precious metal, the fund itself and the shareholders may bear the burden of these losses. The ability of the trustee and custodian to take legal action against sub-custodians may be limited, which increases the possibility that the trust may suffer a loss if a sub-custodian does not use due care in the safekeeping of the trust's gold bars. GLD Prospectus, page 12. In other words, if by some miracle a sub-custodian was able to make off with a bunch of gold bars or improperly cared for them, the shareholders and the fund may take a loss depending on the legal outcome. Legal action against said sub-custodian may be limited, meaning they are not sure if they will be able to win the case in a timely manner to restore the value back to the fund. In addition, the trustee has no right to visit the premises of any sub-custodian for the purpose of examining the trust's gold or any records maintained by the sub-custodian, and no sub-custodian is obligated to cooperate in any review the trustee may wish to conduct of the facility's procedures, records, or creditworthiness of such sub-custodian. GLD 10-K filing, page 18. Basically, it means that the issuer does not have the inalienable right to visit the vault at will to inspect the gold. In fact, the sub-custodian or the people involved with physically storing the bullion can outright deny admission for inspection to the trustee. These particular ETFs can allow the gold to be commingled with the custodian's gold, and the custodian can lease out the gold. Moreover, the gold custodian can give it to a sub-custodian that the manager doesn't know. The sub-custodian can give it to yet another sub-custodian unknown to the original custodian. The manager will never audit the gold, and the gold is not allocated to a particular investor. Since this is an exchange-traded gold fund, investors will probably assume the gold is regulated by the Commodities Futures Trading Commission, but it isn't. In summary, the world gold markets are riddled with holes and gaps, which leaves the door wide open for fraud and corruption. The LBMA touts that they are of the highest standard and adhere to the stringent criteria and procedures, yet there are no audits performed, no validation of purity of existing holdings, and all in the name of liquidity, so the seller gets paid quickly and efficiently, and bullion trading costs for both the buyer and the seller are reduced. It seems to me that at just about any point a legitimate gold bar can be replaced with a fake tungsten bar, and the question is, how long could it go undetected in the ETF vaults? If it's true that there are 1.5 million fake tungsten bars representing 18.6 metric tons of gold floating around in the market, wouldn't it make sense to route them to the ETF vaults and nation's deep storage cold vaults? The gold ETF holdings from the UK, USA, and Germany collectively add up to 2,018 metric tons. It would also take the entire gold holdings of both the London vaults at 7,449 metric tons and the national US holdings of 8.1 metric tons to cover this quantity of fake gold, which might already be in the system hidden behind closed vault doors. If these tungsten fake bars are in the market, the ramifications would be globally catastrophic. I believe this is precisely why we hear nothing about it in the mainstream media. This has to stay buried as long as possible, because it will mean the end for major financial institutions, bullion banks, bonded warehouses, precious metals brokers, commodity exchanges, and even governments. I believe this is why we will never see a true audit of the Federal Reserve, Fort Knox, or the London vaults. As soon as this becomes confirmed and public, it will mean the end of a global economy as we presently know it. I would suggest to stack physical silver and gold in small weights, preferably legal tender 1-ounce varieties, and stay away from any type of investments which involve the 400-ounce and even the good delivery bars. What are your thoughts about the LBMA? Do you feel the system is secure and that there has been no fraud or corruption involved since its inception in 1987? Do you think that gold-backed ETFs have the gold they say they do and will deliver 100% upon request? Let me know in the comments section below. A big thank you to everyone who supports this channel with your subscriptions, likes, and comments. A special thank you to those who choose to be an ST66 contributing supporter. I don't monetize my channel, so all your support is greatly appreciated. If you would like to join the contributing supporters of the ST66 channel, I will leave links in the comments section below, and it will be greatly appreciated. If you're not yet a subscriber, hit the subscribe button. Then select the notification bell to be notified as soon as I post new content. And as always, feel free to share this content.